Okay, let's see what we can get here going. Oh, nope, don't want to do that. Okie dokie. Okie dokie. There we go. That's better. Hey, good morning, Sonny. Son of Jim. Good morning. I left my coffee. Hold on just a second. Let me go get it. Good morning, Cannon. Okay. So, actually, the charge point looking pretty good. 120. That looks pretty good. It looks like it made a double bottom, but I think it actually hit higher. It might be in a really good spot. I kind of felt the same way earlier though when it pushed up. I just thought it was going to hold a little higher. That's a lot of volume in that bottom. So really strong possibility there. I haven't looked at it too much. So when the election happened and the new president was elected, figured it was going to be kind of bad, but he did appoint Elon Musk weirdly to his cabinet. And that could be very, very beneficial for a lot of these EV stocks in concept. I don't know whether policy will actually follow through. You know, that's a different question. I mean, it's a pretty big deal. So regardless of personal opinions about the people, the things that they represent in terms of business, and then Musk being like the EV guy, you know, it's kind of interesting to think about. I really just have been looking at this as a technical play anyways for a long time. Here's what I thought, and I'm not sure I'm right about it, but I thought that what made most sense to me was that this was a auto reaction phase B top going into a phase B bottom and then into a spring, and it's kind of like a double spring. But if you look at it carefully, it's like a 1, 2, 3, 4 motion. And this is looking very similar to what we would expect if it has that push up. You would want it to hold. I said I wanted to hold over 120. So I'm a bit nervous. If it doesn't, it could still just be like an LSPY, but this is very high volume. And we don't want a low volume push, obviously. I just got an alert too on it, pushing over 122. So, yeah, Happy New Year. So, like, my thoughts today are to kind of clarify my own goals for the year, my own ideas in trading, what I want to actually be doing. One of the things that stands out to me going into the new year is just, hey, can you turn it down a little bit? One of the things going into the new year that stood out to me was just what was my, it doesn't have to be all the way. It doesn't have to be.
No, it's not. It's only at 13.
Okay. One of the things that stood out to me was like last year I had a really strong 2 or 3 months in a row, like really strong. Like I was making 20, 30% trades like left and right. And I really wasn't losing much at all. And one of the things that I think really threw me off was right around August, right here. I think I just kind of lost a lot of that drive to trade rapidly, maybe is the right word, or day trade, whatever you want to call it. It's really just swing trading. I was just picking good trades and trading them in and out really quick. And I tend to do a lot better in the market myself when I do that. So when we had that big weird breakdown at the end of July going into August, sort of lost focus on the things that I wanted to focus on. Instead, I kind of just sat on AMC, especially going into the end of August, thinking that this was going to potentially break back out. It wasn't a bad idea because, in theory, if you're going to do we've talked about this before. I'm doodling it right now on the screen. If you're going to do an M cross, like this is where you could do it, right? You could have that jump above this creek here and go, and that is typically where it happens. So in my mind, I was thinking like that's a good place to be if you're just going to be holding shares, holding on to positions, et cetera, even in terms of like long-term leaps. I had leaps back here in August and before then that were for now, like January. And largely they've been just kind of destroyed, right? Now some of them I rolled for sure, and then others I just didn't. I had kept, thinking that there was going to be breakouts, and this was another one that was like a big turn up going into November. And during that time period, you make a mistake one time, it's a mistake, right? You make a mistake a second time, it's like maybe this is a bad pattern. If you keep making those mistakes, then you're really not doing yourself justice, right? And I think when I look at this overall, I'm thinking about how, much like ChargePoint, it's very possible that this is a spring and it's going to play out. But it's really not, even if it were a spring action and it does play out and it makes this nice explosive move to the upside, which is still, in my opinion, a reasonable expectation. Even though it seems a bit crazy, I think it's a reasonable expectation to think that AMC could end up at like $20, going into February or something. It may not be as reasonable to think that it does so in the next 10 days, right? And even if you look at like 2021, that big move, it took a while. It was like January 6th through the end of January was really where that run up happened. And ultimately, like, it didn't take off until after like the major options expirations dates. So it would make sense to me if operators killed it for the next 10 days and didn't allow it to run and then ran it up after the fact. And for what it's worth, a lot of people, if it did happen that way, a lot of people would do just fine. You make good money. You may make an incredible amount of money if you play this correctly. But what I've realized on my part is that I don't think I positioned myself super well. So I'm not in a position where I'm going to make, like, even if it does run up, I'm not going to make boatloads of money or something like that on a single move. I'll do well because I have a lot of share position. But in terms of options, like, it just didn't play it right. So in the grand scheme of things, when you look at your own trading strategy, really it's just you and your ideas about what you want to make, and whether or not you're achieving those goals is completely and totally your business. And you get on to something like a stream. Hey, good morning, Goblin Slayer. You get onto something like a stream or whatever, and you have expectations, and you think that it has to be like this or that, but it doesn't. Like, during this time period, I've heard a lot of people, and I think you guys are all, obviously you're all adults, you know what I'm saying, but like, there have definitely been people on here who've had strategies that were very much like long-term the whole time. I heard a lot of people talking about leaps into 2026, 2027. So accumulating for a long-term potential run-up. I think that's really wise because I do think this is a long-term play at this point. We're at like the widest part of a sine wave that we've ever been at for AMC. We've talked about February 2026, like the whole year. A whole last year, we talked about how this date stamp kept coming up across the market. And it was really like Q1, Q2 transition, I guess you could say, in 2026. February going into March. And that would be like, not necessarily you're going to get there by that date. Perhaps you could get there before, a little before, or even a little after. But it's really about the positioning of the market on the whole over time. And I don't think it needs to be like perfect. So when I look at it, I'm like, yeah, it seems like it's either going to be kind of going into that or coming out of that date. And that's been the case for a long time. So the best possible preparation that you could have made, I suppose, for AMC is to just assume that there's not going to be like a big move sooner than later, and rather build out a long-term position. And if you didn't want to do that because you had other goals in mind, then it really wasn't the best trading environment at all. I think AMC was one of the worst trading environments for the second half of the year. And I think most of you guys would agree with that. We really were just flat for several months. You couldn't play options either way. Even selling covered calls, from what I heard, wasn't exactly the most profitable thing. I mean, you made money, but it wouldn't be like a lot. There was no volatility in here. And then ultimately, like the run we did get was a good run. I mean, make no mistake about it. The idea of like, oh, we didn't go anywhere, so on and so forth, it's not really true. I mean, we ran like 40% in the later part of the year, which is quite a big move. But you would have had to have entered and exited maybe a share position in that time to really maximize those profits. I don't think, from what I recall of seeing the options chain, I mean, you could have made money, but it was just so much up and down volatility that, those positions got really jerked around left and right. So I don't find it to be in line with what I wanted to do, I guess what I'm trying to say. And so I'm not really looking at the new year as like, I have to have new goals. I don't have to have new goals. I had good goals in mind, but instead renewing those goals and saying that really want to refocus on what it was that I was doing before when I was, making good money before I kind of flatlined here. And it was really just more about entering and exiting swing trades at the appropriate time, playing very short term. And by short term, I don't mean like daily stuff or even, options that expire that week or something like that. I'm just talking about like, okay, well, if it's breaking out, cool, I'm going to play a few weeks in advance and that's it. And really just leave it at that. And not having an expectation that it's going to moonshot or something like that. And I did very well, I think, when I was doing that. And when I took my eye off the ball and I started looking at that potential big move on AMC and just kept kind of chasing it, it wasn't like, at that time, like I wasn't buying anything. I told you guys, just trying to be transparent. Like that to me wasn't necessary. Like I didn't purchase or sell anything here really. Just kind of waited. I didn't do anything. But when you lock up your finances and you don't have any other option to play, right? You don't have any option to engage in other trades. And if you do, it's very minimal. So, if you can't invest much or have that good diversity, then you're kind of at the whims of singular plays. So if you have a bad player, a couple bad plays in a row, and you have no diversity, you tend to have, unfortunately, you kind of just burn through your liquid. And that's kind of what happened. I didn't have horrible plays, but I also felt like a lot of the things that I was watching just didn't really go the way I wanted them to go. And that's all there was to it. So I had tied up a lot into, maybe Charge Point was one of them. Again, that one, I kind of saw it early on in August, not looking too hot. Same deal though, like share position just sitting here since August. MPW, same way. I mean, it popped in September, and I didn't, take that opportunity to really exit a lot. I told you what I did do, which was like I rotated some positions around and exited some. But again, just kind of sitting there on those positions. So I had tied up a lot of my own assets, I guess, into what appears to be kind of dead plays, like plays that are not going anywhere. They're just kind of sitting there, or they're kind of slumping down with an expectation that, yeah, they're going to rally, and yeah, I'm playing contrarian. I'm kind of playing against the grain here, saying that I think they're going to do this or that. And for what it's worth, I still think that's very likely, but I think that timing is really a lot in the market when you talk about liquidity. So if you don't have a lot of liquid, you got to be mindful of like, am I going to sit here and wait? It's a sort of straightforward question, right? I think everybody who trades should be aware of that question. Do you want to just sit there and wait on this position, or is there somewhere else that you can put your money in the meantime? Is it better just to let it sit, or to take your money out and come back later? All those kinds of questions, right? So when we were doing our analysis on Friday, I was kind of looking at big picture stuff on AMC. It was just sort of reminding me that like, this is a really big play and it's huge. And I think long term, there's a humongous amount of potential. But all last year, I kind of talked about the same thing constantly, which was even if we got a push up, and we had talked about all throughout the year, especially starting in like summer, even if we got a push up, my expectation wasn't that it was just going to run. I had an expectation that we would probably push up maybe to the 8s, maybe to 13s. That number came up a lot early on. And then the 8s was a really common one. And that was based on like waveform projections, And ultimately, like, it kept getting beaten down. But even then, I was like, I think it's going to pop up and then it's going to drop, come back way back down. So this was not really meant to be, like, in my mind, I should have kind of committed to that because I knew that it wasn't going to be like a great long-term. The way that I was positioning myself wasn't really for long-term anyways. Like, I was thinking like a short-term pop and then coming back down to whatever floor. And we did get that, and it was super weak. I don't think necessarily this is it. And again, I'm not backtracking on anything right this second. I'm just saying, like, the expectation of like, oh, it might pop and then come back down. Well, if it doesn't do that, then where are you going to go? Like, it's going to go nowhere, and that's kind of what happened. So we've spent pretty much the whole year. I mean, we're talking about May all the way till now. It's a long time. I know you guys are like, well, that's not the whole year. Yeah, but we were also there in January and through March of last year. So really, like, almost the entire year has been spent between $4 and $5, like $4 and $5.30. And that's really all there is to it for this year. You can look at in terms of like where we've moved in on AMC as a range. You can look at everything that's happened and call out whatever setups you want to call out, and I have. But I don't think that on the whole you should kind of take your eyes off that big picture and say like, well, what have we really done? We've really done very little. We've tested a low, we've tested back high, and we've kind of just sat in the middle. So we developed like a middle range here starting in January of last year from like $4 to $5. We defined that range. We dropped low, tested liquidity low. We got a huge buyback up. We tested high and we sold all the way back down. And then the rest of this has just been really like pinning us beneath that 514. And that was the story of the whole year. I mean, if you look at the big picture, the story of the year is a drop and a hook beneath 515, a big reaction, and then pinning us back down beneath 515, like the entire year. Like, that's it. And that's important because then you have a really strong line there that you need to advance over. But until you do that, and this is where I think I get a little bit annoyed because I'm like, well, it's so far away. It's $1 away. It could move a whole dollar. It could move 50% and still not break out of that range. And that's true. It could. 515, 510, that becomes this really critical level for AMC. And there's really not much. We could talk about individual price actions. We could talk about creeks, and we do. And we've made advances. We've advanced 1, 2 major creeks this year, maybe 3 if you count this first one, although I don't think it was very sufficiently checked. But beyond that, it's kind of like, well, if we're not breaking out of 515, we're not going anywhere. And that's really what's been, this is like why I was saying like August has been such a defining moment for me as a trader this past year, because for AMC anyways, which is what I've charted majority, that really was I want to say the nail in the coffin, but the fact that we did not make that jump here, I knew it at the time too. I just went against my better judgment because I kept saying out loud on the streams and stuff, like, this doesn't look good. If you don't make the jump over the cat ear, you're going to go down low. You can make that creek jump later, but you're going to go down low first. And that's what happened. Like, we came down low and we didn't make this creek jump till significantly later. And we're finally coming back down to test it. This could have happened up high earlier in the year and it would have looked far more bullish, right? Had we come back down and checked this area out earlier in the year, I think it would have been a much more simple, I suppose, setup. And maybe that's part of the nature of the operator's plan here, was to kind of give hope at different times. It makes sense. It's not really anything new under the sun. So I'm not lamenting the whole year. I'm just saying that, like, I made good money in the beginning of the year. I think there was volatility here. Obviously, that was very helpful. Volatility dropped off a cliff. At that point, when it came beneath, it did not make that cross up. That's one of those rules that I need to really stick to, because it's hard to stick to it, but it's a really good one. And it's a very simple rule with the cat ears. And that's one, again, I need to like kind of refocus on and remember. And it's basically just, you know, hey, you break down here and you don't cross the creek, it's going to go low. And we've talked about it repeatedly. It's a very common pattern in the market, not just AMC. You know, it either pushes up over on that second cat ear and it makes the advancement, or it doesn't. And if it doesn't do that, then 99% of the time, even if it has these kind of false moments of hope, it's going to go low. It's going to go back to liquid lows. And that's what happened. It went right back down to the $4 range, you know, to come low. And so it's weird to kind of look back in retrospect at the whole year and to think about how simple it really was, and how there were a few moments of like maybes, you know, maybe it could go, maybe it couldn't go. But then there were so many like misleading little indications, you know, of turns and all these things that just really don't amount to much in the end, because it failed to advance when it mattered the most. And I think that was this key moment on the bigger picture in September. And we've talked about September 13th and that area a lot, because that's where, you know, MPW advanced. Like, that's where the small cap stocks advanced. And when AMC didn't do that, I was even saying it like on the stream, like, oh, it's doing what it normally does, which is it goes low instead of going high. But it seemed like it was out of sequence, right? It seemed like it was kind of different than what was expected. So for me, I think what this year is going to be about mostly is focusing on trading, not just charting, and making sure that I'm doing what I need to do in these positions to avoid being stuck, like essentially shelving some liquidity for 5 months or whatever, where it's just locked up and it's not going anywhere and it's not doing anything. And you're at that point, it's diminishing returns anyways. Even if it ran, you could have gotten a better entry later on. So as the longer you kind of hold on to those positions, if it's not way, way out there, right? I'm talking about options and stuff. The worse off it is. And you can average down, sure. But at the end of the day, like, you bought them back here where I did, and they were long-term leaps. They definitely lost a lot of value. You know, and absolutely they're going to be like crushed before the end anyways. So it's like, even if you thought it was going to run first thing this year, which, you know, I've said I thought might happen, even if you thought that was the case, it wouldn't be wise to be in a position right now. Like, it just wouldn't. Like, if you are, like, then I'm with you there, because it's again a long-term thing. Like, they were leaps when I bought them. They're not leaps anymore, right? But these positions would have been far more lucrative if you had just waited anyways. and especially with that dilution announcement, I think that kind of, I don't think the idea of like a nail in a coffin is really accurate, again, because I don't think this is necessarily over. A lot of people will say, oh, it's over, it's not going to go anywhere, it's dead, it's going to go down or whatever. I don't necessarily think that's the case. I think it's possible that this still has a big rally, but there's a lot of reasons for that. We've talked about them. A lot of bullish reasons for that. We've talked about it repeatedly. On Friday, we talked about it. But yeah, so to me, like that's sort of the summary of the year for AMC. For GME, it's a bit of a different story because GME has had, I would just say, more consistency. Like it's done a greater job, in my opinion, of respecting what I would call like traditional technicals in terms of like creating a very simple to follow creek, breaking that creek, and then advancing. I mean, it's a very straightforward play by comparison. It does not have some kind of crazy major reversal. A lot of the things that happened with dilution, for example, or share offerings happened early in the year, back in June, before August, September, and it was already kind of at the bottom. It was in an appropriate place going into August, September, whereas AMC was kind of pushing towards the top at that time on its cat ear. This was already kind of low. And much like AMC, I think that if you look at the overall picture, there's some similarity where AMC had been kind of trapped in this range that was created last January. If you look at where that January range is on GME, it's down here at like 14. You wouldn't say it was trapped there at all, but if you look at where that major liquidity is, and we've talked about this in theory because of what the differences between AMC and GME are very obvious. We've talked about how like if you look at where AMC is trading, and I'm just going to say according to the shift chart, which is kind of a unique way of looking at it, but if you do it according to the shift chart, it's really trading at a much higher level, not significantly, but in terms of like where that liquid center is, it's up here around this 1060s area, 1050s, 1060s area. That's like a suggested value level that I believe right now is true, but it's not, it's confusing because it's not 1080 or 1070 now. It's actually, if you move this up and then convert it backwards to the original liquidity that it was at, which means you have to do all the reverse split stuff. So it's almost like a imaginary zone. It doesn't exist anymore, right? But it would be here when this was like at those prices, $2 or $3. So we're really trading, in my opinion, lower in terms of value than what's on the chart right now, which is $4. In some ways, it's more like $2 to $3, right, beneath here. And that's important because when you look at what's going on here with AMC, if that's really the zone that's being marked out, then a lot of the battle that we've had in our center being around that 485 level, that 485 level is actually like the original bottom, so to speak. You compare that to GME year over year, and you can see like that's a really important critical liquidity level for GME. It's not the same in terms of proportion because again, AMC had all kinds of stuff happen to its chart, and I think that's a big impact, has a big impact on what we're experiencing right now. But in theory, like there's a lot of similarities. If you look at the nature of like where has the majority trading been anchoring, where do you consider there to be a floor, right? And so what was fascinating is at the very end of the year, again, year in review here, we talked about how both Adam Aaron and Ryan Cohen diluted right above those liquid floors. For GME, it was at 24, and GME did have a split value as well, right? But then AMC was right above where the original floors were back before the big 72 run up. Now, from that point forward, we might say there's not a lot of consistency. I'm not going to sit here and say it's one-to-one. It's not. But there's, it's just not, right? GME largely is held up a lot better in some ways. And I think a lot of it just has to do with, again, the fundamentals of the company, like GME has plenty of cash on hand now. They've been doing a lot better overall, turning profits and stuff and cutting off losses. I think AMC's done well. It hasn't done poorly in that, but it still sits at a disadvantage. It's very important to analysts and to big institutions to see that there's a growth potential. And if they don't see that, traditional investing would just say no, like that's not a good buy. One of the things that kind of baffles a lot of people is like, why is AMC still being shorted so much? Why don't these institutions want to buy it? Well, they do. There's a lot of them that want to buy it. Unfortunately, they're buying it as like a distressed, in distress through distress funds. I think some people, like your Vanguards and BlackRocks, are just playing it for derivatives and other things, and they're using the mass amount of interest in it to drive their own profits, and they may very well mark it up. As an operator, they could do that. But when you look at like the overall picture, I don't think they're the same. I've read it through a lot of recent analysis on both companies, and AMC still has a burden that hasn't really been met, and it's a very large debt. They just can't. Their debt outweighs their cash burn essentially, and that's a problem. So they've got an issue, right? They're burning through too much cash too quickly. And so what happens, what the expectation of the market has, is that there will be dilution. And I think that's been very evident ever since the conversion to APE, the fact that they were now allowed to dilute. Just look at the chart, the expectation there has been a great factor, I think, in why we've been seeing like maybe almost an ease in coming down very low at times. That doesn't mean it's going to last forever. And I'm not going to sit here and argue fundamentals if you guys want to argue fundamentals, because there's always different opinions. But I mean, ultimately, bottom line is too much cash burn, too much debt, bad company investment. You know what I mean? And I think that when retail looks at it, they still see long term, which is good, recovery. I think that's true. But also they still see like that squeeze play in the back of their minds. So we're in that position. It doesn't mean it won't happen, guys. I'm not saying that. You know that I've already talked about it multiple times. I think it's going to go back up quite a bit. But it's a very slow process, So what about some other things we've talked about this year? We haven't talked about that much. MPW, I kind of briefly mentioned it. I've been expecting this to also have a squeeze, and it's kind of doing it. It's on the daily chart right here. It's had some long-term triangulation going on, and it should lead it back to at least like fives. I don't necessarily have an expectation it's going to run beyond that at this point. There's a pretty massive uptrend here that it could easily bonk its head on. And it may do so around 555. There is a gap up here at 624. If it fills that gap at 624, and let's say it goes beyond 525 and goes to the 624 gap, it's possible that this is going to get that second wind, much like AMC did in January of 2021. And it's in the chart. There's nothing wrong about suggesting that could happen. But right now, from a technical standpoint, there's also a ton of places where this could just stop straight up, right? And like not advance. So do I think it's a good trade? Well, from this bottom, yeah. But I mean, how would you have known this was the bottom exactly? I'm not sure. We had some indication of that over the break, that there could be a turn because of divergence. But up until about the first, frankly, of the year, which was, the first trading day being on the second, it was still going down, So they really kind of held it in that position until this bottom. This is a heavy volume bottom, but ultimately, like, until it broke this wedge, there was no confirmation. That didn't happen until, like, literally a few days ago. So this is kind of it. Like I was saying on the stream Friday, that this kind of did just confirm. It did just at least break out. It needs to find support and hold support, and if it can hold support here at like 415s or thereabouts, I think it's got a good leg in it. It's a good trade. It's a simple trade, right? It's an opportunity to make some money if you want to make some money. At the end of the day, is it going to lead to some kind of massive push all the way up to the 8s or something? Maybe, but it has a lot to prove. It's not quite there yet. Is it in the charts, Booksy? Could it happen? Yeah, of course. But a lot of that is dependent on perspective and like what you think again about the comparisons that we've made. And if you don't think the comparisons we made are particularly right, then you would probably look at this and suggest, I think, that it's a longer term hold, and that it ultimately could not see the light of day of above 10s until like February. And I've had a couple different models built out for it over time. One of them is like pretty late. I mean, it's September this year going into February. That could be as long as it takes if it kind of breaks down again and goes low. It needs to basically hold here as a spring, like a localized top, phase B, spring, hold, push kind of thing. So where is the buy-in for that, Booksy? It's really high up, like it's a risk on play right now. You would not buy in right now expecting it to go. You would basically just look at it and say, well, I think it could go back to the breakout of the wedge, which is about 523. But if it breaks down there, it's probably going to head really low to like 250s, back down towards the bottom. The real kind of test here is the SOS, which is up top. And that's very, very high up compared to where we are right now. This is up here around 670s. And you can wait until then. I think it's not going to be as big of a trade. But ultimately, if you're looking for like a markup play, like that's kind of the best I could give you, because in this particular situation, it has to come all the way back to the top anyways. There's a gap there, which is nice, around the 630 area. And that also puts you above this kind of rising trend again. That would be like a recovery move. The 50-50 certainly looks nice, from down here at like 369. If you do the 50-50, it seems like it could go up to about 890s, something like that. It seems right. Everything's in the right place. But ultimately, like as a range, it's pretty obvious. If this is a spring, it has to then jump this creek, which it's trying to do. It has to hold a retest. The retest is largely kind of where we're at right now. If you're going to call it a phase, it would be saying like this was a spring action. It's not going to dump again for like a bigger spring. You have to suggest this wasn't a phase B bottom, and it could be. And if this is a phase B bottom, guess what? It could be pumping up in order to do a real spring, which is like a low dive, right? We don't know. It's a little premature for that, right? It has to hold above these levels at like, really it's like 392, which we are above. And if it holds 392 and it advances again, good chance it's going to go up towards the 5s. Good play. Beyond that, it's a bit speculative, right? So this is another one of those ones. It's like there's a great amount of potential. I've seen it the whole year. I think it's there. And I think 2 years from now, you probably look back and if this thing could be sitting at $12 or $13 or whatever, and it'd be like this would have been a great time to be in the play, down at 3s and 4s. But for like a swing trade, it's got minimal. I've had minimal expectations. Like I've made them too big in the past. I think we need to be better just to kind of see it level to level, and let it be what it is, right? So the expectation here is fairly benign. It's not like super crazy. And charge point's kind of that same boat. I think there's a expectation here that this could be it. This very well could be the bottom. There's a simple pattern here that if it plays out, it's good. When a phase B bottom generates, usually it pushes up and then tries to come down again. It has to hold the creek or the support. It did not hold 120s. So at this point, it's now generated kind of a second creek, which really goes way back to the top. And I hadn't really marked this off specially or anything. This is on peak value here. Why am I talking about this chart because I want to, because this is one that I think is a potential really good spot to invest. It's risky, like a lot of things are, but it is in a really, really good spot where I think it could be ready to go. But this is ultimately like a very long-term trend, and it comes from the tops in 2023, back in September, so a long time ago, right? Kind of like AMC, a lot of this chart has been kind of bound to under $2, which again was established in January of last year. So much like what we saw in AMC, that January setup ends up being kind of a wall, right? For good for you if you're in charge point, because that wall ends up being really high. It's like way up here. So you have a huge amount of space to get there. And frankly, you can't get there without breaking out. So good news there, right? Unfortunately, that's not the same for AMC. Like we said, it could go back up to that wall around 512, 513, and technically like still be kind of stuck, So it's not ideal. It's not so the case for ChargePoint. I think if it were to come all the way back up to that wall that was built out in the early part of the year, it's really up here like 230. That to me is a huge move, and I don't see how that could be anything but like a breakout here. Maybe it's a UTAD, that kind of stuff happens where it's like a really late upthrust, but I think that the nature of it is a lot simpler in some ways. So anyways, I'm looking forward to seeing what happens here. I think this could be a really interesting year for ChargePoint. I think during the course of the year, we may not see it go exactly as planned, but I do think it's very possible that, again, over the course of the year, we end up wrapping around $3, which means that's a significant price change. I think we're going to come back up and try to test those tops. The place that you would be careful about that's like almost 200%. So the place you'd want to be careful about that is at like 2. I mean, it's fairly simple. There was a lot of supply right here from 2 up to about 240. And that would be kind of like your danger zone, I suppose, for this particular chart, where you may not see that advancement. So, yeah, so I think that when I'm looking at this year, I'm going to be focusing mostly on good trading opportunities, things that I think are good in and out points, simple. And the reality is that probably that will change the dynamic quite a bit of our channel here, because we have a lot of people who only come in here to hear about one or two stocks, right? And when you go out of your way to kind of look at other things that are kind of out there, or even if they're not out there, just kind of different. We've spent a lot of time on the same stocks, and that's just one or two sectors of the market. At most maybe 3 or 4. It's not very diversified. There's certainly other opportunities out there. Semiconductors, that's one that I think we were talking about because someone had brought up FANG last week, and it kind of leads into that. And that's a really big deal. Those kinds of stocks those tech stocks, there's going to be some that get some massive pushes due to AI and other things. The folks that are supplying the resources to your NVIDIAs and AMD and all that stuff. And we've got a lot of other things that we could look at in terms of sectors that we just don't really touch. Like food and beverage is one that I was thinking about. Like, I don't really have any F&B kind of stocks at all. Like, we just don't. Microsoft is one that I was thinking about, like how Microsoft always has something going on, behind the scenes. And they've been pretty quiet, basically because of Tesla blowing up. But there's other things, right? Like, that's still tech, And so we're going to kind of like try our best, I think, to look around. One of the things I was thinking about was shipping. Tariffs are an interesting question, and I'd have to kind of look more into that, so what that would do. But like container shipping still remains like the most, like one of the lowest carbon footprint ways of shipping stuff. I mean, it costs just as much to go farm to market as it does to ship like a huge amount of product across the world. People don't understand that, but that's the truth. Like in terms of like carbon emissions and stuff like that, it's kind of incredible. So people think of the future and they think of like, oh, it's going to be like more EV farm to market kind of stuff. It's like, well, yes and no. Like there's parts of that that are good. But in terms of like environmental impact and all those things, it's just really interesting stuff. We're reading into some of those things. Like it's like, oh, okay. I think that the market, sometimes we're not prone to looking at it that way. We kind of look at it backwards. But anyways, that's just me, or I've looked at it backwards. So there's a lot of good things like that we can look at this year. And I think that it's important to diversify. Real estate, obviously I've got MPW. It's much more than that. There's more than one real estate investment trust out there. We looked at a couple others early in the year, and then again, kind of walked away from talking about them. I don't see why that can't be part of somebody's portfolio if they want to invest in real estate, but they don't want to, go out and buy a condo or a house, try to flip a house. You can do an investment trust, right, and kind of reap some of the benefits of real estate booms. And again, this is bottom of the barrel right here. This is one of the it's in the top, easily in the top 5. It might be top 3 for medical properties. I mean, it just is in the world. And we're not talking about like locally or something. Like this is worldwide. This is huge. They've struggled, and that's why they're down low, right? So it's opportunity, but not a guarantee. Anyways, so what I'm looking for today on AMC, I sort of mentioned it on last week, and I'm kind of disappointed, to be honest. I woke up this morning thinking that it would be a breakout. I'm not positive. Maybe we're just waiting for that kind of noonday push, but it's just a very low volume day. And so I'm kind of done with my yearly outlook recap kind of deal. I just wanted to kind of briefly hit on those things. I think the expectations for this channel are pretty low anyways, but like when I'm changing things, I'm going to let you know. So one of the things is, again, just focusing on like good trades and not focusing so much on just the chart, but focusing on the trades themselves. And one of the things I would note here is that there's a bit of a low volume push here over this creek. It looks really weak. And I'm noticing that it's getting hung up right underneath 4, just like everyone else probably noticing this. It's built out for itself, again, like a hook. So we keep hitting our heads on previous walls, and this would be considered like a triangulation. We've talked about this before, but the initial breakdown here, you can see the high volatility spike before the volume came in, which was on the 26th of December. It's pinning it right around like 408. And ultimately, if you kind of zoom in here, I've got the extended hours on. You can see that 406, it's not 4 exactly. It's really more like 406. That ends up being kind of the critical breakdown level. This is where that high volume drops it, and then it hooks, and then it comes back down. And so looking at it from that perspective with the upward trend, which is, again, the bull path here, the attempted bull path, I should say, since they didn't actually succeed, you can see it's a pretty strong triangulation, from this sort of a double bottom. It's made a slightly higher low at 387. It goes right back up to 406. That would have been an easy enough trade to make, but there wasn't much to trade, I guess. It would have been from 3.99 up to, it's like 6 or 7 cents. What surprised me about it is that on the big picture, this is still a narrowing. There's definitely like a narrowing wedge here. Now, some are going to look at that and be like, well, that's not a wedge. It's a head and shoulder, right? Plain as day. You can see it on the left chart here. It's like, well, it looks like a head and shoulder, right? Well, it does. what's particularly kind of interesting about this is we kind of just went through this on MPW, and it had a similar problem, which is that it pushes up and then it starts doing what could be a head and shoulder, but it doesn't look like much of one from a visual standpoint. The reason I'm bringing this up is because it's just a simple comparison, right? Like we just experienced a similar thing, so we can look at this and say, well, there are similarities. And one of them is that while this built out into this big push up on a head and shoulder, which again is like a hook, but it ultimately goes to a higher top, AMC did not even in the same time. It's a similar build down, and I've mentioned these kind of head and shoulders as like wind up and unwinding. And notice that it creates this wedge action on the way down before finally trying to break out here. See a really similar pattern here on AMC. There's a clear like widening here that's going on, much like there was on MPW, like kind of building out towards the top. You have what appears to be like shoulder markings, right? And then as it breaks down, it really comes down in a much more of like a narrowing fashion. Now, some of you are going to be like, yeah, but that didn't have like a dilution. And ultimately, like this broke down, it's done for, it's blah, 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 blah. Again, yes and no. Like the bits and pieces here that matter, there are some similarities, right? So one of the things that bothered me a lot about this drop was coming beneath like 440. And we dealt with that back in December when it first came down. That still bothers me, right? They generated a very clear and definitive back test on 440 coming back up in December. This was right before I went on break. And that's fairly similar to what we see here on MPW going back up to really this $5 range, $4.94. You see that drop through the line. That traditional kind of hook action does often appear as a head and shoulder. I don't think that that's particularly unique. Usually, if it's going up steeply, you'll see that to the upside. We've talked about that before, where like you'll have I'm just doing an example right here. You'll have like a widening, and then when it breaks down, the shoulder mark is actually like a breakdown of, and usually if it's going to keep going, there's a weakness here. But usually that shoulder is doubles as a breakdown of the trend. So it does create a bit of a head and shoulder, but the shoulder itself is a walk down through the existing trend that was prevalent going up. And it doesn't have to be a widening, but you get what I'm saying. You know what I mean? So then it becomes like a complex head and shoulder structure. What's fascinating to me is that sometimes, and I think this has been brought up before here, sometimes you develop a bit more of like a wedge to the downside. There's going to be a widening to the upside, wedge to the downside. On AMC, I can't really say that this has played out very well for us. I wish I could, but you know, one example would be here, I'll show you real quick. One example would be like this walk down here. To me, this is apparently the same thing, right? It's a similar example. Maybe not the one you want to hear, but it's a similar example. So there's a widening here, and you can see that the walk down, and that first shoulder is really like a hook, much like what we're seeing right now. The first shoulder is like a hook that just breaks down right through that level. And then what remains is what appears to be like a narrowing, right? And at the end of the day, it does break out, but it doesn't do it in a very violent or frankly like strong fashion. We can use it as an example of what we don't want to have happen if we're bullish. I think it's a good example because it's similar, right, in that regard. So much like what we saw here, right, where you have this, and there are similarities here, you know, but much like what you have here, where you have this kind of secondary action and you're trying to go down and generate a recovery, there's going to be a lot dependent on what happens at the end, right? So this may have been perceived at one point, and I don't remember exactly, but I'm pretty sure I talked about it, so that's why I'm bringing it up. I think it would have been perceived as like a wedge, because there is a bit of a falling cat ear motion. Those are the shoulder marks. And when it finally breaks out, notice it didn't come back above like kind of the starting point of the widening. and then ends up doing this kind of false breakout motion later. And this is the one that I think was like a big nail in the coffin. I felt that way anyways here when it didn't recover, but there was two specific motions, this one and this one, that both just felt really bad because you're like, yeah, it's not holding those supports. They're trying to drive it down. And this wedge ultimately doesn't play out. I mean, yes, ape was invented, so on and so forth. But if we had looked at this in retrospect and we said, well, if it breaks out, it should come back up here. Well, that would have made sense to me. Like, okay, you're going to break out and then potentially go up to like 60% or something. Well, it made sense because you're coming back to retest, right, that trend. And that happens. Instead, it like shifts down pretty far, you know, and that shift right here to that lower low really truncates that move quite a bit. I think in the end, it's not like incredibly different. There might be like a 0.5. Yeah, it's a little bit weak. It doesn't even quite get to the 60% mark. So that's reason I'm doing that and I'm drawing that 60% is because that's the traditional, it's like 62%. It would have been the traditional breakout from the distance here traveled on this particular wedge. So there's a shift in the price that greatly affected the target, right? So this is common, right? But what you don't want to see is you don't want to see that continued weakness ongoing. And I think that we might be in a situation like that. We might not. And I think what we've been looking at is consistent with those ideas that we may have kind of a narrowing here, much like we did in this particular time period. And once again, you're kind of struggling to recover back above where that widening, quote unquote widening, because I mean, it's not like pitch perfect. Depends on where you draw it. On this extended time frame, it's not really the strongest thing ever. It looks okay. It looks better without extended hours on. The top looks really tight. The bottom looks loosey-goosey. Like really different. There's a lot of hits on the top, like several, 5 or 6. There's only like 2 or 3 on the bottom, and then they're pretty loose. But this would be considered the widening, I think. If you had extended hours on, I think you would just start it from either 409 or, not surprisingly, right where we are right now, like 406, right? So much like what we experienced back here, you don't want to get trapped underneath, right? And you're continually making weaknesses. I've mentioned this before, but like these don't bode well, right? Whenever you like hit a low, react, and then come back down and make a new low immediately, you're kind of settling into a bottom that ultimately is a weaker bottom. I mean, usually what happens is that it then plays out later that you head back towards that bottom again, towards that low again, if you can't make that recovery above. So much the same way, what we don't really want here, and this is what I'm kind of worried about with the price action this morning, is I would like to see it kind of recover immediately back above this top at like 411. And if we don't, I'm nervous we're about to do this kind of motion here where we're just going to come right back down and make a new low and really offset, frankly, any kind of run that we would have by dropping it lower. And that makes sense to me. You know, I know it's not ideal, but if this drops down low and continues to be weak, then the expectation there would be, well, that's not good, right? It's essentially like telling you right there that there's no stopping power and that the bulls aren't able to hold it. You might say, well, oh, why not? You know, maybe that's the spring. No, because they've already made like 2 lows and they've already tested the top. They came back above the floor and dropped it, and now they're pushing away from it. Like, you can only do that so many times, right? Before you should be convinced that it's not really going your way. And so I would be looking at this very carefully today on AMC and into tomorrow. This is not prescriptive, okay? This isn't me saying this is going to happen. This is me describing like a scenario that I don't really want to have happen. So I'm kind of preparing myself for what would happen if this drops to a new low here and hits like 380s. It doesn't have to be the same. right, as this particular example that I'm showing you, but there are a lot of similarities. So right now, that's kind of where I'm at with like looking at this and thinking about like, well, what happens if it drops to a new low? I'm thinking it offsets it quite a bit, and we could frankly see this thing get stuck underneath like 450, 460, and just never come back above. Well, what about the gap, Booksy? What about it? You know, we've had plenty of instances in the past where we've created a gap level, plenty recently, right? Like this was one example, very easy one, is just going back to November of 2023. There's a massive gap created here, and it wasn't until significantly later that we came back up to fill it, but not before we made a huge amount of percentage to the downside. The nature of these gaps often has been, unfortunately, like a bit of a trap for us, where we think about it and we're like, well, it's there, maybe we'll go get it now, and then we don't actually get it now, right? So you got to be careful. The gap is around, you know, the 519 area, something like that, 514, and I don't have it on this chart because I got the extended hours on. Probably all right here. I could just look and see where it is really quickly. I felt like it was like 519 or something. This just looks like right at 5. The closing value was 520. Yeah, that's why I thought it was like 519. So it closed high and then it opened real low and it only popped up to like 487. So pretty sizable gap here. Like we're marking it off. We may come back to this later, but for now we're going to take it down, see how far we can go with it. So I would be concerned, again, if this makes a lower low, that we don't actually breach this level. I mean, it's very possible. And even if we did, I've talked about it before, there's still a chance that you just hit that gap and drop again. It's not what I want to have happen. It's just there, right? If this is just a series of LSPYs and you're just kind of popping and popping, the creek jumps themselves are a bit misleading. They make you think that it's going to go, if that's the case, right? Ultimately, they're just taking it back up to sell it down again, reposition, and work its way lower. And I'm not going to go through and like talk about every single possible scenario today, but that's a real possibility here based on this, the way this keeps walking down. And Friday we mentioned that that's true, and it's easy to make a bear case. And I think it's really easy to make a bear case that this is some kind of like S curve in the making that could easily just pop up one more time and then dump like a UTAD almost up above 440 and then drop again. I think it's an easy case to make for a bear, very easy. But I do think that a lot of your indicators, we mentioned OBV, RSI, and MACD, all had decent to strong divergences, like on the 4-hour time frame, which is, you know, about as low as you want to go thinking about institutional trading. That's pretty significant. Like they're not looking bad. They look good. There's a lot of divergence here from bottom to bottom. You've got a rise in on balance volume. It's holding up. It's not selling off farther than the actual creek, which was back here. So we're basically, our on balance volume is as high and higher as it was when we were up here at like 5 back in September. That's significant, you know. We can see that. We'll just take a look real quick. Kind of keep this in the periphery here, over to the side, because that's the extended hours. But we can look at it right now on the 4-hour, and you can see there's a pretty massive divergence here that's occurring. It needs to catch and hold, right? So like, again, where's the evidence that this is going to break down, Booksy? Well, it's not really there if you just looked at indicators. The indicators are kind of nice. They look pretty good. I think looking at overall price action makes things kind of tricky, right? And this would have been a similar situation back here, by the way. I don't want to like put a nail in this coffin either, but you know, we did have RSI divergence here as well. And ultimately the divergence does correct in this big push up after it breaks out. So like this ends up being like a pivotal point of divergence correction, but it's not what people may have expected. You may have looked at this at the time and been like, well, this is like massive divergence. It's a wedge. It's going to pop and go really far. Well, it does pop and it goes back to the top here, and then they use it as an opportunity to sell down. And there's a reversal of that divergence. There's a bearish divergence on the next two tops. This is good information to keep in the back of your head, because you can see how they played on expectations of a rally, and then ultimately, like, where does it fail and why? You can see it pretty clearly what's going on right here. So this was also an example of one that, you know, it does have in this wedging action, does have a divergence in terms of what's going on, and then it pushes up to the upside. Well, that's not good. So how do we know? I don't know. On balance volume looked a lot more like 2021. You know, we talked about that. I think it's safe to say that, yes, you could look at this and make a similar, you could draw a similar comparison and say, sure, you know, that it could be similar, where this pushes up and it goes to being overbought very quickly, like January 8th or something, pumps up to like the top here, and it's already overbought, and then it tries to do some kind of a hold above the $4 mark. That's what it would look like. And then it would try again, you know, maybe a little bit later, and then drop down. And that's certainly a good possibility, you know, for bearish action. And that could drive your prices significantly lower in an attempt to try to get down probably to some of these levels that were built out really early on, like 360, right? Which, again, we haven't checked. We haven't come back down to check it. Certainly that would be how you could get there. So you got to be mindful that, like, even if they look good, that kind of rug pull could still happen. I feel the same about, to some degree, about the MACD. I think we mentioned on Friday that the MACD does have divergence, but it's not macro. If you were to call this divergent, you'd be a bit wrong, at least on the blue for MACD. Let me get rid of this, because it's actually just kind of going down. I think that the red is also below. The orange on my chart here is also below. Yeah, I mean, it's not, there's not really a divergence. You could argue that maybe it's a weak divergence, like it's barely below, but that's kind of silly because the price is barely below, you know, as well. It's kind of like, no, it's pretty much 1-to-1. However, locally there is divergence, and that's somewhat positive. That's from December 16th through now. There was a strong enough divergence, meaning that it's tilting upward. And that doesn't surprise me. There was a lot of volume drop off right here after that big push up right before, you know, it took off for the holiday around the, you know, 20th. Pretty significant drop in volume over time. It stays elevated, but it's like dropping, right, the whole time. I think they just kind of let it go. That's what I said, I think, in the Discord group when I posted like once, right, about it. And I said, it looks like they just kind of let it go. And what I meant is that, like, exactly what I said. Like, you just kind of like let the market do its thing. If sellers are winning it out, they're just like trading it pretty regularly. Doesn't mean there's no institutional involvement at all. It just means it's kind of just on a hold pattern. Like, let's just keep going. And we're not really like seeing any kind of major change in anything. Everything's just kind of by the books, cat ear, slow drop, very low volatility, you know, right here during that holiday. Even though the volume is elevated, it's dropping, so on and so forth. So this is looking fine if it has follow through, right, MACD, but it's not huge, not big picture huge, right? One of the things that really struck me as particularly interesting was the OBV, which is on balance volume on the 4-hour. At this point, you might expect there to be some really obvious answer, and there's not like a super obvious one, but there is a very strong pattern that's deviating from price action. So you may be thinking like, well, you should have the answer then, right? If it's this drastically different. Not so. We don't know the mind of the operator in terms of like what the goal would be here. I would look at this and suggest to you that it looks really strong, but it's on the verge of potential collapse at the same time. So what we talked about on Friday was this has been consistent. It hasn't broken down out of its trend yet. The only time it did that in that dip was right around earnings, I think. So yeah, November 8th. So right here. Yeah, during this dip right here, that's the only time it seems to have kind of broken down. Okay. But it's important to know, like, what is this pattern that we're seeing, right? So in most cases, the thing that I look for is kind of the thing that I talk about the most, which is those cat ears, right? And in most cases, that's kind of going to be the like building blocks of like a center structure or a bottom structure. So it's either top, bottom, or middle, which doesn't give you a huge amount of information if you don't know what to look for. But if you know what to look for, it's pretty straightforward, right? So the up thrust usually represents either what I call like the paw, right, or the ear. And then you usually have like two other motions. This is the walk down motion, right, as you're seeing right here. This is kind of like the walk down motion that we're seeing on the drop from that dilution. It's generating what appears to be kind of that cat ear structure. You see the same thing appear on all sorts of levels, right, throughout this chart. One example would be back on June 24th, thereabouts. It's kind of like what first caught my eye. So this is an example of like an ear, and then there's a double ear here. So that build up into a middle, at first it might seem like a bottoming, and that's kind of what I remember thinking about this area right here. Like, it could be that this is holding because it's making a higher low. Of course, it didn't make a higher low, but it was making a higher low after the fact. This was a little bit of a weakness, right? And then it drops through, and ultimately, like, that's the support that's broken, so on and so forth. We can keep going, on that analysis if we want to. I don't really want to right now, but that's the gist of it, right? Is that, well, it did generate what appeared to be, for some, maybe a bottom, but it had a weakness early on, and ultimately we see that in the OBV right before it drops. If that's the goal, right, then you could look at something like this and suggest that pretty easily that, well, yeah, it's holding. While it's holding right now, the goal might not be to hold that. The goal might be to actually push down through that and to get that final drop to retest this like major creek. That puts it in a very different position, doesn't it? This is significantly weaker by comparison. The reason I'm bringing it up is because in 2000 and so this at first looks like a cross up that then would build out to a breakout. So when I glance at this, let me explain a little bit better. When I glance at this, it kind of reminds me of, and it probably would remind you a little bit of the January breakout, right, from 2021. Like, if you look at the overall picture here of what's going on, ignoring kind of the noise, this certainly has that vibe of like, oh, it could just like rocket to the moon, because this overall setup, I'm purposely like dragging it up, so kind of getting it away from the other things. This does look a whole lot like what happened after, right, in the reaccumulation phase after that big January 2021 move. It does. Just like we mentioned back here, the reason that it looks like that is because that cat ear crosses up, not down. So instead of right here, right, did you see the difference, I suppose? Instead of coming up and then failing and then going low, right, which is what happened to us on September 13th right here on the price action, instead of doing this, which is like that more typical paw cat ear kind of setup, it crosses up and over the creek, it holds, and then it advances. This is pretty much exactly what we experienced in price action, right, in 2000. If you look really carefully, you don't even have to look carefully, it's pretty obvious. It's pretty much exactly what happened, right? It's the same exact motion. So an on-balance volume right now would make you think that, oh, it's going to go again, So here's your cat ear, and instead of dropping, this M goes up and over, right? Instead of doing this here. where it fails and then comes down. Very simple. Same exact thing happens right here, except it does not go up and over. So if you're wondering like how often does this kind of play out, like all the time, right? So again, this is even like a smaller iteration of it. It kind of shrinks down. Same deal. This is the exact same thing. It just breaks. It breaks down right here instead of going up and over the creek. It never jumps the creek. So if I'm looking at on balance volume right now, that I think would be the greatest fear for AMC. If we were just kind of looking at this saying, well, what could happen? The similarities are pretty straightforward. This particular motif right here certainly looks like it could be ready to mark up. If we're seeing the same thing appearing here presently on balance volume, it certainly looks like, oh, well, it looks like it can mark up, right? There's a big drop here in on balance volume. It looks like it's holding, certainly that could be the case. And I don't think that's an unwise assessment of it. You could look at this and say, I think it's going to just mark up again. What's required is that this break to the upside presently, meaning that like right here, where we have this on balance compression, it needs to jump up and over really now. I mean, if you look at the shapes building out, yeah, I think this is a complete 1, 2, 3 there, the cat ear right there. This would be like the middle portion. So it should be jumping over like now within the next day or two. If it fails to advance, I think there is a big risk here. I think if this fails to advance or if it head fakes and then drops, either case, I think there's a huge risk that this turns right back down. Because again, this is like a micro version of the same thing we're talking about in the big picture. It needs to advance, period. Okay. So if you're using on balance volume, that's what I would be looking at. I wouldn't pay as much attention to the price action as I would just what happens right here. And I think that would represent, again, probably a similar situation to what we're talking about, where you might get like a head fake up to 450s this week, and then the following week you'd have some kind of a drop down to like 360. And that ultimately would lead to like a breakdown here. The reason why I'm not sure between these two examples, and on Friday I was kind of more bullish about it, I suppose, in the way I was talking about it, is because in 2020, again, just a good practice to kind of go back in time and look and see what was going on during this bottom, is again, we're considering that this could be very similar to what happened. I've already made this case, I'm not going to make it right this second, to what happened going into December of 2020, where there was a build out and then a big drop. And then it actually just kind of reversed and rocketed, right? And there's a lot of similarities to what's going on right now. This motion and this motion, okay? Really, really similar here and here. I'm trying to like make it more one-to-one, but I don't think that's going to happen. So there are some great similarities there in the way these two motions have set up. But the on balance volume was really interesting in 2020 because it actually drops really low and it doesn't look quite the same at all. There was a peak on balance volume right before it dropped, and then it drops to a low that it hadn't seen since April of 2020. So looking back, this is what I'm talking about right here, is it goes back down to revisit, right, essentially where this gap up level is. I think that's pretty interesting. I don't know if there's like a one size fits all for any of this stuff, frankly, and I think it'd be kind of silly to suggest there is. But I do find it very important that when the drop happened in February, right before it happens going into March, that's where the on balance volume is. It's like a reset, right? You see how there's like no difference from these points here to roughly here, and then all the way back to here, right? So this kind of represents, perhaps for us, a bit of a creek cross that maybe wasn't easy to see or perceive without the on balance volume to help. So I'm curious because this resulted in such a massive drop, and I'm curious as to what that would mean for us presently, because I'm like, well, we didn't get the gap fill, first of all, down low. We did see new highs, right? We just showed you the chart. We did see new highs here for the on balance volume. Very similar in that regard. But there was a breakdown in 2020 before it finally took off. There was a drop, like a major drop. I, again, don't think that these comparisons are always going to be one-to-one, but I would suggest to you that, yeah, this went back down and it breached a low before it had like a major rally to the upside. So similar in some ways. This did not hold up. It was crossing creeks. It was making higher on balance, even though the price is coming down. It's very divergent. Then in the end, it comes back and does like a massive correction. So take that into consideration when we look at the current time frame. If I can get there by warping, it won't let me warp, will it? Nope. I don't particularly see like a strong comparison in terms of like that drop level, you know, like where did it start? Does it have to reset kind of thing? I don't see a particularly strong comparison there, though I guess we could try to make one. Instead, I think maybe the best thing to do would be look at perhaps where it was around like 530. Again, it's pretty different in some regard. Maybe back here even. Maybe. Yeah, I don't know. It's tough because when I did the price action comparison, I would have looked at it like this drop or this drop would have been similar to that March drop. So we can check it out and see where the on balance volume was at those times. Sure. And then the other one was when it came back up through it and it landed on top. But that's not really, you know, exactly the same anyways, so it's kind of confusing. Up through it and landed on top. Maybe there. Yeah. I don't know. So maybe here. And it kind of seems like that's the anchor. So that's really low. It feels like too low. So that's one possibility. And the other is basically there. That seems a little bit more reasonable. Like that would be the one that you maybe try to come back to. And it has been revisited a bit already. In this bottom particularly. Yeah, I'm a bit nervous that this is like a weakness, sign of weakness, and it's going to come up and head fake. And it may not be that simple. We don't know that the operator was 100% certain that they were going to do a head fake here, but they did, so that's all we can do. Try to think of where else I've seen something like that, where it does make the crossover. It has a weakness, and then it makes the crossover and goes higher. See, it doesn't do that in the price action back here. There is a weakness, but doesn't ever make the, it really doesn't make the jump with any strength. Yeah, to me, this looks like a matter of uncertainty almost, like, which makes sense because I remember that earnings thing was just bonkers. It's right where it happens too. It's almost like it's almost like two different operators, because like two competing operators, like somebody didn't want to go and somebody did. That's a big speculation, but I think that it might be right, because there's I wouldn't normally say that. But there's something odd about this move here on a couple levels. Remember when it happened, it closed above the creek, which would have been like a bullish sign, and then it dumped below the next day. I was very confused by that move, but then it came down and it made a double bottom. And I believe that Stockfather at that point, when it jumped back over, he said it was a change of character, which I thought was peculiar, because I thought it was going to run anyways. But it was a change. Like, he wasn't wrong. Like, it was a change of character locally. That's what was so strange about it. Was it like it was, because it jumped and then broke through, which would be bearish. It was very strange price action. It was like this double M shape came up, broke out, it held above. I was like, oh, it held. That's good. And then it didn't. But then it did. It made a double bottom. The reason I'm bringing that up again, I've still not ever quite figured that out. It was a very odd move. There's a sign of strength here in the OBV when it pushed up, just like there was on the price action. The OBV like broke out right where that price action did. What's interesting is that the price action did not break. It broke down beneath the creek, but it did not break down enough. It reset the wave. It did a 1, 2, 3, 4, 5, which is kind of what we thought was going to happen. We did a 1, 2, 3, 4, 5 back here when it made a double bottom. 1, 2, 3, 4, 5. And we estimated it could be kind of weak. That was one of the ones we came up with, was like 560s or something. It ended up being pretty darn close to that one, unfortunately. There were others that we talked about. But we were like, well, one of the weaker ones would be like a 1, 2, 3, or 5 to the upside. And I don't know where that chart is. I'm sure I could find it. It's like they reset it to take it back up. Like somebody wanted to get their shares sold up here. Maybe they reset it because they thought it was going to go down. It's very confusing. It's like bluffing kind of stuff. So if I think I'm going to take it up so that I can sell it back down, that I was originally thinking that I was going to take it down to bring it back up, but not a lot. So maybe this is the original idea, was that we're bringing it up to generate a spring action here and then take off like a real spring, not like a weird thing. So the original, maybe the operator that was like bullish did want to take it down. So they were planning on taking it up and dropping it low, which would have been consistent with this image here, this drop. So this was like a head fake of sorts. This is like a bull operator saying, yeah, we're gonna go for the spring, and then we're just gonna take off. But somewhere in the midst of this at earnings, because of the earnings report and the earnings call, I think it was that somebody changed their mind. And I think it's bizarre because it's hard to, it's really hard to prove. You can't prove that. But it does make the most sense. So I think your operator actually, it seems backwards, because of what I'm saying is that I think the operator was bullish, but they intended to take it down. And I think that's correct. So I think the operator was bullish. They were intending this to be kind of like what we would call like a phase B bottom right here. And then this would have been taking it up for a spring. And this would have been driving it low and driving to drop beneath 403, which they still did. But either they wanted to, there's only two options here. So either they wanted to take it down early, and then when earnings happened, they realized that there was going to be a dilution. So they decided to pump up their shares to get out, cover positions, whatever you want to call it, re-enter new short positions, sell some of their other positions. Maybe, again, this idea that we had early on, which was that the May 15th 13F filings that were made, that was the game being played, and that was them trying to get out of, somebody trying to get out of the positions that they had entered back here. So the main trade was here to here, and just kind of resetting their positions. They probably had obviously accumulated or whatever during this whole time, and especially right here in the middle, which would have been like the liquid center, which is where we spent a lot of time, and there's a heavy amount of volume right here in that middle. So they brought it up instead of dropping it low for a spring. That would make the most sense of why you have like what's called like almost like a double change of character here. Like it doesn't make any sense by itself. So there are two operators, just looking back on it, because I'm thinking now like that matters because it matters as to what might happen next. But thinking back on it, that was a super confusing motion. From an institutional standpoint, it didn't really make any sense. And I think that's why Stockfather called it a change of character here, because it was a change of character, like they decided to take it back up. But I had already thought they were going to do that because I thought it was bullish. So it's odd because now I'm like, it's almost the backwards thinking. It's like you have to think through it like twice. So you're like, oh, so they were going to take it down here. Well, I think so, maybe. You know, I think the desire might have been to originally just try to dump it and get low. But then they decided to send a clear bullish signal to get people to buy in to take it up. Because this is a very significant bullish signal that it hit that double bottom. We knew that when it happened. It was a reset and they began a three-wave impulse. So they saw an opportunity to take it back up to sell shares, and they took it so they could drive the price low. Because they could have done it here. Because, I mean, what began as a very bearish signal flipped almost overnight to a super bullish signal, which is very strange. And it jumped the creek. So, really interesting. And as a result, you have a huge amount of people buying in to what is perceived as like a really bullish price action. So it's the same motion that occurs here. Why does it matter? Because they took it up back to that liquidity shelf. Dilution happens along that liquidity shelf. It absorbs a lot of the dilution, but we still don't know what's going on with that. As far as we know, it's not done. And then you have a rapid sell-off, obviously, because of selling, and people are like, oh no, we're stuck. But then notice that doesn't cause the OBV to dump. So this is the curious part of this. So even though the price is now significantly lower, I don't know. I guess it either means that the trap was successful, and now there's a huge amount of people just holding shares, waiting to see what happens next, or they weren't actually able to get enough people they weren't able to get the people to sell that they thought would be able to get to sell, so on and so forth. Other weird things happen too with dilutions, because you enter shares into the market, it messes with on balance volume. It should mess with on balance volume, because on balance volume has to do with total number of shares too. So it's like being traded and all that stuff. You look at the formulas, it would affect it, which also makes this kind of confusing, because it's like, well, then how do you even chart on balance volume? I don't know. Maybe you shouldn't. You should just leave it alone. Anyways, so it's interesting. I think there's like a double change of character here to take it up, drive the price down, but on balance doesn't dip. But when they drove it low, when the big sell-off happens back in November, on balance does show weakness along this trend. Again, there's a change of character. So this is the weird thing. It's the same exact story, but just slightly tweaked. Because this did show weakness where this held pretty strong. So this is a bullish action jumping, bearish action sliding all the way back down through the creek. It really looks like a traditional sell-off for AMC is what it looks like. This looks like it was designed to be a head fake followed by a dump. And instead it doesn't. So it becomes like a weakness, which is weird, almost like it wasn't intended to be there. It's like a triple reversal, like head fake, and then go, well, double reversal, which is just strange. So what does that mean? Well, again, if the goal is to drive it back down to this like 32 million mark and kind of reset before going anywhere else, the on balance volume obviously doesn't have to do that perfectly in sync with like the price action, and it's not. So we do have a divergence right now that's pretty bullish. What we're missing is like a final kind of sell down. It just doesn't seem to be there. It's like holding up too strong. So that's again two different ways of understanding this. One would be looking at it like, oh, it's like a reaccumulation model. It's holding strong because no one's selling it, and it's not going to succeed in the sell-off, and then it will break out and actually reverse really hard, and then this whole time, all of that, and it is all there. Like there's multiple hits on this. This isn't just like 1-2 points. I think it's at least 3, maybe more, right there. Yeah, I mean, it looks kind of weak to me, but so what you'll note is like, well, this is past tense, Pooksy. So this is reactive. You're just describing something that already happened. It doesn't give me a picture of the future, and I would say, yeah, it doesn't really. I think using the by itself, it doesn't. Using the information we already have and what we've been talking about with the wedge and all that stuff, I think it gives a pretty strong case that there may still be a desire to just take this up one more time, head fake it like it's gonna run into January, and then dump it and really push it down low, probably going into, in which case I wouldn't say we were right all along, but we were right about the general motion of cat ears down to a low. I'm curious as to why you would do that in the way they did it, because it's just so like out there. This is one of the strangest things. It is and it isn't. Like on the one hand, it's like it's like pretty straightforward. Like, okay, so it's just a big hook, on this trend that existed, and it failed, And as long as it holds this creek, it may not go forever down, but it could technically just chop down along the creek and still go down, OBV would not be so lucky. It'd have to see some kind of a massive sell down at some point in order to kind of reset this. And frankly, it's kind of running out of time here. It doesn't look like there's a lot of time left to do this kind of move. So, yeah, I think we're right about one part of it, which is this is a January type move. I don't think it's going to happen next month. Whatever happens should be in the middle of January here. But I think that there's a danger in this charting setup right now. Hmm. $30 million, huh? Where is that? June 18th? That's interesting. That's interesting. Very interesting. Everything is where it should be, except it's like almost like it's too dramatically low and it's not really adding up. If this went down, let's take a look. Yeah, it's really fascinating. There's like no way, you know, I'm like looking at this thinking to myself, there's like no way. The price action is really disproportionate to the on balance volume. Like on balance volume here makes sense if you're going to come down to this level because it's right at 50. See that? It's perfect. It's like completely logical. You look at that and you'd say, sure. If it's an S curve, this is the right place to be to break down and do another drag through to go back and hit that creek down here and reset that on balance volume. I mean, it's a significant reset, guys. This is marked off. I've never really done this before, so I'm not really like doing anything that I don't really have a lot of evidence for this, except for what we just looked at in 2020, which was a reset right before it took off. The market took off in the January move, but there was a reset first. What's weird is that back in this time period, that reset happened with like price action. So like the same things would apply here, here. This is a very strange chart. I wonder. I know, I'm in La La Land again. But I'm trying to figure out something real quick. And I haven't put my finger on it yet. This is pretty darn similar, actually. The bizarre thing is that this doesn't have any obvious connection to price action, really. It's like over here. It's like way off to the side. Okay, only go back to the on balance volume because this is not possible to do it without OBV. I got to get it before the takeoff. I'm not really sure, you know, why you would use that level. There were other levels that were available. Like one was up here. It was significantly higher. This would have been one that I would have thought would be you'd be more confident in. Maybe that was the desire, was to dump it from one to the other. So this had held up in August. See that? It held in August. They take it up. What I'm doing is I'm thinking about like, what if I were charting just on balance? Like what would I think the operator is kind of up to Right. So this is the August to September kind of move here to the upside. So it held that level. Where's the 50% on this? And that's a historic level for the chart. The on-balance volume had been there for 2 years. And then this is almost like a gigantic wraparound. This whole thing just looks like a big dump and pump around that marker. And we used this level when we did our waveform. So it's not insignificant because we used this level right here and then this one right here when we did the waveform analysis. So that region on the chart it really represents a lot of things, but it represents the anchoring, I think, for that on-balance volume. Here to there. Yep. So let me think about it. So if I create a liquidity shelf and I want a certain number of people in this play, and I see this as we got way too many people in the play. We need to get a massive sell-off and dump it back below a floor. Then I use the second floor that's created as a support, which is here. So the last place that this touched the on-balance volume was there. Interesting. I'm trying to think about my this chart as not just descriptive but predictive. So I'm trying to make sure I understand goals, I suppose. Oh, this was established as a trend. So there's no trend on the top, but there's a trend on the bottom. Yeah, and that's a 50-50. That makes sense. It's right around the upward motion. That lines up really well with what I would expect there if that failed. Comes right back down, retests that creek, holds support, and then rockets. This is weird because this is like the middle. And it actually breaks right back above it right there. The on-balance volume was never the same after that. For obvious reasons. I'm not really expecting anything confusing again, Jason. I'm just thinking about the nature of what was trying to be accomplished here. Why bother do this? We have an obvious answer in 2021, because the price action is fairly regular. It looks, both of them have divergence, right? But this ultimately doesn't correct the divergence. It just enhances it because it creates a 10-month divergence, right? Coming down. But the price action goal was really simple. There had already been a gap fill, so the only reason you take it up and then drop back down would have been phase B bottom into a spring. What's confusing is that our current time frame, we don't really have that. We don't have a gap fill. We didn't come back down to the floor. It's either just highly, highly volatile, and it's going to have a really nasty final drop, or it's not. It's completely the opposite. It's not going to actually go down and fill the bottom. Because it doesn't have the setup for it. So I'm a little lost on, I can see like why from a wave point form perspective, this is like your main wave. And then you break down, you're resetting the wave, you're checking the price, you're doing all kinds of things, ticking all kinds of boxes. It sounds kind of silly, you know, talking about it like in these terms, because unbalanced volume isn't necessarily a leading indicator. You know, we know that. Like anything, it could be misleading. But what's curious is that at least in this case, there was consistency in terms of desire to kind of drop it back below. Because you have to understand, like, the on-balance volume is highly consistent here. It wasn't growing. It really wasn't dropping too much. It was just very, very steady. Now, the price action was as well, but it doesn't follow the price action until late in the game. It had already broken down. This is like an LSPY beneath that range up here. So it had already broken down before on-balance volume really takes a nosedive. And even then, going all the way down to the bottom here, it looks like it's going to just kind of keep falling off a cliff, but when it bounces back after March, there's more. Like suddenly we have a breakout. So even though this price action is doing its own thing, unbalanced volume finally comes back above. It's almost like a good argument for why springs work, like how liquidity travels in the midst of like a downward action, because this downward action brought in people, essentially, you know. I mean, it increased it quite a bit. It was significant. So the downward motion brings in people. It doesn't look like it because the price is still low. It's another one of these things. It's like it subverts your expectation for what's going on really with liquidity in the market. This dive heightens liquidity. And I mean, some people are like, well, yeah, duh, if the price goes down, people are going to buy more. Well, that's not always the case, right? A lot of times the price goes down and people sell more, like they get rid of it. And that's when you start these massive sell downs. I would say like this right here is a pretty defining moment for AMC. This buy up in May, kind of a big deal, you know? And so the rest of this then just becomes like a reaction to that in some ways, where you have increasing on balance volume. It's a continual buy-in here. It's like what we're hearing about from some institutions buying AMC after this massive drop and rally. You're like, oh, well, on balance volume just keeps rising. It's the same thing that's happening right now. The price isn't doing great. It looks kind of garbage. The same thing would have been said about 2020, and it was. You know, people that go look at that and they say it was a squeeze, what are they always saying? They're always saying that this is where the shorts were trying to drive the price to zero. I don't think the on-balance volume, at least from this point perspective, I don't know if it really corroborates that. That's the word I was looking for. It doesn't really. It kind of makes it sound like, no, like this buy-in right here basically was successful in bringing in more people than the previous 2 years of trading. You know, they'd shaken a lot out, but then immediately go to a new high OBV that hadn't been met in 2.5 years. I mean, it's a significant move. And then it continued to grow even though they're doing these massive volatile shakeouts. These big shakeouts here designed to do what? Well, A, bring in shorts, sure. B, shake out retail. But then also they're using it as opportunities to buy in, and the peak on balance is like right here on this big push up for this big drop. What's crazy is that this is the only other time that you see that sell down happen that goes beneath that floor that was created 2 years prior. It's like right at the very end. And it's probably because it failed to advance when the rest of the market was advancing in November 2020. There was a markup period that was happening starting in September, and then right after that, I think we have dilution in December on AMC, and then it dumps down. But what's interesting is like on balance volume, I guess is what I'm trying to say, is like it's telling a bit of a different story here. That this was designed to be a really highly volatile shakeout, but that volume increase, it's even obvious. You don't have to look at on balance. You can just look at the volume increase here on this shakeout period. It looks nasty. It looks distributive, and it is to a degree because it is trying to come back down to a low. But then when it gets to the low, it's like there's no more selling volume. It just then from then on, it's just buy for like 28 days or whatever, you know. So this shakeout, and to a large extent, these two moves right here do not convince the market. And I probably would suggest this is where maybe your Reddit community is really gaining. I mean, it is, but to some degree, we know that GME was different. It was kind of doing a different motion in this period. AMC is like walking down or whatever. GME is kind of walking out while that's happening. I just think it's really fascinating, I guess, because I'm trying to look at this and suggest that, well, if it were going to go like we think it might go, you would expect there to be a very similar kind of setup where you have like a long-standing on-balance volume, you got a dip, and then it holds above it, and then there's an attempt to try to drive buyers out, drive retail out before a markup. And the spring action is successful. And both of these spring actions, both of these drives down to, at that time, like the $2 floor here and then here again, are successful in driving out a lot of people, but this one doesn't make a new low. It no longer, it's like now it's elevated, now it's a divergence of a pretty massive proportion. So I'm just talking through it, trying to wrap my brain around it so I can know what to compare. So I'm looking at this like, well, I don't know if we can make the same comparison because we're kind of lacking, we're like lacking certain pieces of information. The on-balance volume is fairly flat and elevated. It's like as it's going down, well, at least from June run up all the way through August, this is kind of the peak. This does look like a top, here. This would be an attempt to drive the price down. It's semi-successful, right? So look, the price is driven down, but then immediately, look what happened. Like immediately it comes back up and on balance volume eclipses. Now, I think maybe what's confusing again about this from a stock perspective is there's splits in here, there's the ape thing in here. Who knows if you can trust it? But I would suggest that this is pretty straightforward, like similarities to what we experienced to some degree. And I think we're going to see it play out on different time frames where like this hits a new low that hadn't been hit in a long time. It's been pretty stagnant. This dumps down, hits a new low that hadn't been hit in a long time. Massive exodus, if you will, in the on-balance volume, and then immediately comes back up like a new buy-in, at least comparatively on here. And then again, very similar to what we see in that previous example right here. It was flat for a long time, and there's kind of like a big sell down. Again, that results in a massive flush. It happened again. So this time when it sold down low, it was really successful in completely resetting almost on balance. And now it's like lower than ever before. Again, I know this is proportionally whack because of certain things, but like, I don't know, hear me out. So this is the walk down. This is a gigantic like hook almost for on balance volume. And then way low to new historic highs again. See the widening going on? Once again, pushes up to the highs. And now it's coursing back to the upside while the chart's chopping down in a very ugly fashion, just like what we saw in 2020. So the motion itself, in that regard, regardless of the fact there's dilution and maybe the change of character here, although I think that's important, I think ultimately we would want to compare it to that because there is a hike in volume here. I think it's a fair comparison. The only thing that's confusing me is that there's a lack of continuity with like trend support. It doesn't seem to be here. There's a little bit of it, but the wave in 2020 is like very straightforward. It creates like a sideways motion. This is directing motion, so you think it's going to go down a certain way, right? And then that's the direction that the bears are heading, so to speak. There's a head fake, and then the rest of the time, if you look at that direction, the rest of the time is just navigating like around that. So this is, I'm redoing basically 2020 here. Okay, so like the original trend, so it goes like this, right? This is a clear direction of like where you want to go, and then the rest of this is just like a waveform interacting with that direction. So like down, right? We know it plays opposite to a greater V shape. We've talked about that. So this ends up being like a push down away from like a massive return, which is interesting. So it's like pushing away, and then it reacts really strongly back to the upside. I can see why we've been looking at OBV thinking, oh, this is very similar, because it is. But I cannot quite put my finger on this mark, like where is it going, that kind of thing. And it's mostly because they're widening. I hate to be kind of bearish here, but I almost can't see how this goes forward without dropping. Like, based on what we're looking at with OBV, this needs to make a bottom here that's higher. It's like a double divergence. Because like in 2020, when it finally does the drop, it doesn't even come remotely close. Notice that on this one, there's a huge amount of space covered, obviously, but it does make a new low. I guess I'm just a little lost as to where that marker should be. Well, maybe that's part of what this is. Maybe this was designed because it's such a long-winded downward channel. Maybe it's like a later attempt to define where that is. We had looked at that a little bit anyways. It's interesting. It's like misdirection, I guess. The goal was the bottom of the cat ear. Yeah, it's funny. Usually GME distributes while holding a rising wedge. This is when the holding is strengthening. Yeah, I kind of feel like we're missing, like this was a drop. And when you look at it from the point of view of like a price action, it looks fine. Like, oh, it went to a new low. But it's missing like an actual sell down that's strong, like a really strong one. It's like the market's not convinced. It's just not. It's like not convinced enough that this is going to go down. They haven't made a sufficient drop to really scare off OBV. And I think that the volume, on balance volume, I think that this is the key right here. I'm a little bit lost as to where this middle should be. I wonder if it's just because of this. I think this is just throwing me off. Like I want it to be the same, but it's not the same. It might be this simple. That's it right there. I bet it is that simple. It would make sense because again, we're talking about like yearly stuff here. Like big term. Because this then looks like a test on that that's a little weak that shows a dip and then it comes back to it later. And yep. And I get it now. Okay. I think I got it. So this is what I was looking for. I was just trying to find like a reason why that level would be there. I think this is it. But I might be slightly off. I'm really close to it. So there's a series of like gaps and stuff. We've talked about this before. One of them is like right here. And then the other one is over here. This was an early part. And I was curious why those gaps were where they were. They're at the same level. There's some weird short position that's announced at that point in time. We've talked about the middle here being around 6s or like 613. This has to do with a lot of other things. But like the dynamics of it are pretty simple, straightforward. Like this is basically like a middle of the range kind of deal. There's a lot to it, but we don't need to. We don't need to like overthink it. It's basically right around 612 or something, 613. And that's not really been something that we've had to worry about, except in like the extended hours. We've come back to those levels. So it was like one of those things that kind of just put out of mind. But if you're taking from like a middle point, how do I describe it? Like most of the time when I talk about stuff and I'm referring to waves, I'm talking about how there's usually like a reaction off of a middle in order to do like a slingshot, right? So like for example, you would have like a center mark and then you're reacting away from that. So if the wave is kind of going back up and that's the wave, then a lot of the interaction that happens ends up being like contrary to what you might expect, goes away from it, and then it returns, and you get like a whip around, like a 50-50, as we call it, right? So like this becomes like a really important model for understanding, to some degree, what I would call like a slingshot, but the market is just using pretty simple percentages, you know, and driving the price down and away. If your brain is feeling a little mushy, like mine is, you might kind of think about that in terms of like, well, what happened back here? It's very similar in some ways because like this is the liquid middle, right? We've talked about this, and this is all of that OBV is like pushing away, right? You're like walking away from this level as far as you can. And then there's markers in here of like halfway points, and those halfway points are then used, like this is like the halfway point, right? These halfway points are used as like anchors to push away from the real target. So you're using like essentially like a liquidity. I wish there's a better way to describe this. Just, I mean, a wall is fine, but it's not quite right. It's like a corral or something. It's just meant to temporarily like keep the price pinned so that you can keep doing what you want to do and driving the direction. So there's a direction established here a goal in mind, you want to get to these lows. You're using this as a way of kind of holding the price down. This ends up being what we later see as like the waveform. So it drives the price away from it in like a halfway motion. So this wave in and of itself is like a micro, very, very small part of this picture, right? So it's the same concept. Yeah. So this middle, this is why I said I kind of see it now, because this middle is used as that halfway point where you're pinning the price beneath it to push away and then back above, right? That point. And so even though it's a little different because, again, this didn't have like a 2-year cycle going sideways, it did have a long cycle up here, just got shifted down. And when we look at the shift chart, it's actually right there. It's really close. It would have looked a lot more similar to what we see over here if this weren't really low. So it's pretty much the same thing, even though, again, kind of doesn't look like it at first glance. This is the same idea. We talked about this a minute ago. On balance volume drops, but then when it rockets back up here and it approaches that wave, this is the point in May 2020 when the on balance volume finally goes above where it was back here, right? And we see the same thing happening here and here. Both of these motions bring in a lot of buyers. So like this one especially is really significant because it's like, yeah, that's where it happens. Here to here. And then again, weirdly enough, here to here. So just like this brought in more, I mean, technically all three of these do. All three of these bring in like more and more until the very end. And then look at where you go back to. This is not a coincidence. This is definitely part of the design. When you come back up, look at where you are. Like I marked it off by looking at where the on balance volume was here in August 2017 and then again in 2019. There's a 2-year cycle here of sideways. But then look at where it comes back to. So this is where it's wrapping around, right? Driving the price away. On balance volume comes up. Now it's divergent, heavily divergent. Volume is way higher, way more people are buying into this, holding it here than they were back here. But the price is wrong. Price is in the wrong spot. It's like lower, and then it keeps getting lower, and volume keeps growing, and it doesn't shake out until this final shakeout, and then you get that push up. So the price driving down actually kind of does the opposite. Again, it doesn't cause more people to get out. It causes more people to get in. And we're seeing the same thing right now. And so there's a huge disconnect between where this level is and ultimately where the price eventually goes. And then, not surprisingly, the next motion is that 50-50, right, around that floor. So again, it's like you're kind of building out a series of slingshots that are just kind of becoming more and more and more macro in scale. So very theoretical in some ways, but also important because it's already kind of doing the same thing, but it's doing it really low. So now there's like a major disconnect between where we are. Look at where we are. We're at $3 or we're at like $4.04, right? And look at where we are compared to even just back here, like in the beginning. On balance volume is like significantly higher on the 4-hour here. Than $11. It's like that disconnect is the same, where this is like on balance volume right here in November was like significantly higher than it was even in April 2019. So this last push down becomes this massive like rubber band effect, and it just finally corrects. It just melts up. And it goes back and corrects because it's been like way long, away from. It just doesn't make sense. There's a complete and total disconnect. This might be why there was a lot of talk early on, and a few people had made like a thesis paper about share offerings and how they increase. Like there was a lot of early theses about how share offerings were necessary. It might be part of that idea. I'm not going to try to go there and like prove or disprove that right this second, but it's a similar concept. So this push down would have to represent like a final attempt to kind of drive that price down, and it's not been very successful. That's why I'm wondering if there's going to be like another shakedown. But this would then represent like a massive disconnect between beginning to end. I wonder. It makes sense. It really may seem very confusing, but like, remember we had talked about this, and we had talked about how like these drop down levels tend to represent like triangulation points in the future. I think that's what we're really saying here, is that we're kind of confirming our ideas that this was a very significant, not just because there's a gap, that's fine, but because this was a liquidity shelf for such a long time. This essentially plays the same role that this played, because this is the shelf that you built out your liquidity on, but we couldn't change the on-balance volume. Like it was gently increasing for AMC from here to here, but ultimately like it flatlined, topped off here, and then dropped. Same thing happens here. It drops off. And it represents like where you eventually return back to, because this effort to drive the price away from that level, that liquidity shelf, brings on more volume, increases on balance, and that drastically increases it in the end. And we've been saying the same thing, that there was like a triangulation here, but the only difference is like I've been talking about how that triangulation unfortunately may not be accurate because of the shift, which is how I got like that $20 value. So I think we're correct in our thinking, but I think that this has been, so this does tie in really well to the theories that we had before, because it really would be like here. Yep. So the literal idea of walking it down and driving away retail buyers and all that junk is kind of fake. It's a bit of a misconception, because in reality, the on-balance volume, while it has been fluctuating greatly and it's hit historic lows, is also hitting historic highs. So like there's a disconnect if you just look at it from like the one side. Anyways, this is where that shift is. So the correction is way overdue, basically. Like the correction should take you right back to here, which is what we've been saying, because it's the same thing. It's like we're talking about this guy right here, which is, we know value-wise, like there, at least according to like what I think about value shift and all that. So it may seem a little bit disconnected from like our other ideas, but it's actually not. It's very consistent. The fact that this on balance volume is significantly high compared to where it was right before that drop off, and then taking the shifting into consideration, is actually really smart. Yeah. So this effort to suppress, suppress, I don't really know if that's the right word. It makes it sound like it's nefarious. There is, there's certainly like an element of that, because you're like, well, if they're holding it down, then it's fake price, blah, 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 blah. I don't know about that. It's kind of like that idea of like holding the ball underwater. Um, the the concept is very that analogy is very basic. Like you're pushing the ball down, the lower it goes, the more intense the reaction. It's going to go up higher when it bounces above the water. All that's true, but whereas a ball would be fighting against buoyancy and gravity and all this other stuff, that's not really the case for the stock market, right? And so you would look at it as in terms of like buoyancy being like the pressure upward as like a buying pressure, right? And gravity, being like the downward pressure, doesn't really play as big of a role. It's just there to help buying pressure, right? If you pull the ball down, it's just going to get more and more reverse action. And I think that's kind of what we're seeing. Like there is a desire to get that final sell down, but then that reversal action becomes huge because your market demand is high. Like it's up, it should be up there. It should be above there. And it did go above there. I mean, that's the crazy thing, way beyond. But like it was already higher, down here. It like reset basically, and then immediately goes way beyond. It's very similar. It's like slingshot type stuff we're talking about, repeated over and over again. But this is really interesting to me because I'm like, yeah, it makes sense. The spring itself should bring in institutions and shake out retail, and it did. It dumped at the end. A huge amount of shares got dumped, but then there's a massive return. Now, some people are going to say, well, how did the shorts play into that? Shouldn't there have been like a squeeze motion? Maybe. I'd have to look and see how short volume affects on balance volume and what that exactly means. I'm not sure off the top of my head. I have to look. I don't think it would matter, but you may just be seeing sellers is what I'm trying to say, not actually shorts. Or maybe you do see both. I don't know. Anyways, point is, it doesn't really make a difference because whether they're selling their shares and giving them back to institutions or they're opening short positions, selling is selling, buying is buying, maybe that affects it, but I don't know. My education stops there on that. I have to go look. So I might get that wrong. But it makes sense to me. So this is like a push down away. It's already floating. Like this is the pressure build up here. Right? And then you're holding that. In this case, they'd be holding it to accumulate more shares and to ultimately try to get rid of or try to dump selling. Like, you know what I mean? Like really get that hike in selling right before taking it back up. It's not really been able to accomplish it yet. So based on this and this alone, I would suggest that it has another drop in it. It seems necessary. It seems like there's a necessary dump that needs to occur. This is why I'm stuck, because price action just doesn't look like it. Unless they're trying to use this like as an S-curve. Maybe that's it, to get to the gap, 291. I just don't really see where it gets that sell down pressure from. It's got to come from somewhere. And it's late. It'd be like way late in the game for that. Also, not to keep beating the same drum, it doesn't really add up in terms of structure. It doesn't really add up. It's a good way to start the new year, I guess. Got a little puzzle. Yeah, there's not much else to say about it right now. I think the reason I'm like a little stuck is because I think it's something about this midpoint. I'm like not seeing it. It's here. I just don't know where it is. I keep moving this line around because I'm just not sure. I feel like this is the most correct. But then again, it's like, if that's the case, this is way behind. Like, it should have dropped below here and it didn't. I don't know. We may not get that gap fill. I guess that's what I'm trying to say. Kind of looks like if it does do this, it would not be that low. So what may happen is we may get a little pop, maybe this week. Even if it doesn't happen that way, I wouldn't really worry too much. Interesting. Where's it going? I guess sometimes the most obvious answer is probably the right answer. But it looks like it's trying to do a 786 maybe. And then the 854 is just the gap fill. So 340. I wanted there to be like an easy to see answer, but I don't see it. We had talked about GME a little bit on Friday, and I'll finish up with this. There's it's kind of a bit of a bizarre setup for GME because it got a bit of a short-term bearish problem with some divergences. This happened in 2021 as well, so it'd be easy to argue that like, well, that's the same thing that happened in 2021, and it still ran. What we talked about last time was that it really just need to hold this like 29.90 level. If it can hold that level, it should be fine. I mean, it sounds too simple maybe, but that's really what it is. Because if it manages to hold this and can jump some creeks and stuff, it should be in a really good place to just start taking off. I mean, genuinely think it would be fine. One of the issues that it's been running into is just these repeated up thrusts back to 32 and failing to go back above. But that's pretty normal. If they're trying to drive the price low, they're going to use, just like going high, you're going to use supports. And going low, you're going to use the supply levels, the resistance. So kind of walking it down through here. Keeps making lower lows. I'm not a huge fan of that. Like, just keeps dipping low. This is Thursday. Came lower than it did on the 27th. Does seem like there's like a mild creek cross here, right there in that jump. In terms of the rotation's on point, but it's following the orange, not the blue. So we had talked about that before. Like timing wise, it was pretty on point up until like it hit 1, 2, 3 times in a row where we kind of expected it would. When we did the comparison to the 2020, 2021 run-up, there's a very similar area on the chart. Again, it just needs to hold this this motion right here. Like, it's not really much more complicated than that, because that's where the jump is made. There's an advancement, support, it's coming back down, it needs to hold there. It signifies a lot of things. There's multiple creek crosses there. This is the big jump across. If it dumps beneath it, then it's a possible double head that then looks pretty bearish. You'd have to come back down towards 25s, which is sort of what I've got here as a low. Possible that there may be a move like that, just again to shake out, but I'm thinking if it holds above 29.90, it's in good shape to just sort of take off. It's very similar to what we saw in 2020 in that regard. The rest of this timed out incorrectly, so it did not follow through. There's pops here, but they're not even close to being in the right spot. So I don't know if I should just shift these over or just get rid of them. But I think that 37 is still a really key level. I think at the end of the day, that's where you would see, if there's going to be a reactive move back up, you would see like a move here that would then basically generate like an SOS and then go again. And that's the first major target. And then the second major target's near 47. But the rotation stopped, so it has not continued. The rest of the rotation is a move till about, really it says Wednesday, and I'm not going to change it. I'm just going to leave it. If it's wrong, it's wrong. But that's where the rotation was. I knew it was like this intersection, and it comes from back here in November 7th. There's one right there, and then the next one is right here. So you can see backwards. That hit, and then the last one would be like here. So if it's going to go, I would suggest to you that, and it's going to follow suit, I would suggest that it goes by Wednesday or Thursday of this week. We might see a turnaround on Tuesday or even this afternoon. And I think it's going to go up to like 37. But the main criteria, I suppose, if you just want to have like a simple enough criteria, is that it needs to hold 29.90 and then come back above 32.10. And then it should push right up to 37.72, and that's going to be kind of the do or die motion if it can get there this week. Once it gets there, it's at the final creek cross. And it's been pretty consistent with these. Every time it comes above, if it manages to hold, usually does a pretty good job breaking out. And this would be the one that green line is your 50% on the major big picture. So it's very likely that if it does this 50-50, it's going to go from 30 all the way back up to 43. And then we'll see. Like, that's kind of the next motion I'm looking for. And I think it's the most accurate that I could give you in terms of predictive action. That's where I think it's going to go. I don't know beyond that. I think there's a bit of speculation after that point, whether it continues. That's where we talked about like a big move to revisiting one of these red lines that I've got going up. One would be in the 50s, like 55. The other would be really high, up near 80. So KXIN, I don't know what that is. Yeah, that's interesting. Oh yeah, this one. I got an alert on KXIN because it crossed up and over on the diamond structure. It went back and tested this. That's good. So it did a downward test on that creek and the diamond breakout, roughly. And then if it continues, it should have a push. It's right where it needed to be. It should have a push up to 3, potentially. And I'm guessing, yep, there's probably a simpler way to kind of draw out that right there. So once it breaks out, it's a good buy. Yeah, KXIN was brought up, I think, on Friday. Looked at it. So I think it looks pretty good. It's right on the verge of that break. I may have put that line a little bit too low because I made it the floor at like 169, but technically, yeah, like the way you see it visually here with the things should be a little more accurate. It would go from bottom up to here. I'm not positive it goes that high, but it should have that support before it takes off. If it's healthy. You know, how many times I've said that and then it just goes and you're like, well, I guess it's just going to go, you know. This right here looks good. That's the big floor. So it needs to push up and then retest. I'm going to add another alert here. Yeah, KXIN looks like it's about to be a buy. I know it's already up 5%, but it's got to make that jump. It's getting close. I haven't looked at WTO. It was rocketing last time I looked at it, but I was a little nervous that it was just going to distribute on the top. Yeah, so lots of speculation here. It held this support when it dipped back down. This is at 37.23. I would suggest that there's probable stop loss territory there. You might even want to just draw like a line. Just keep it simple. Just say, yeah, I don't want it to cross beneath that mark. If it's going to go parabolic, it shouldn't cross through there. Yeah, I mean, this is one that when we talked about it again on Friday, it kind of just mentioned that it's at a pretty important junction, but it's not really looking like there's a necessity necessarily to come above here, and that's a problem. You're already like overbought on a lot of time frames. It's got some history with this mark not being very helpful. We've spent a lot of time distributing along this area multiple times. So like 1, 2, 3. So I mean, this is a tough one to sell like as a good trade. It does have divergences on the bottom, but those divergences would be pretty much erased at this point. It's already come back up above that bottom and where that drop starts happening. So yeah. Yep. That looks fine. I wouldn't say it's like horrible. Mixed bag, you know. Maybe go to a higher time frame. Let's see what it looks like. This RSI has not been super useful. Meh. I mean, it made a higher high, which is good. If I try to ignore the noise, maybe this is like, I don't know, gonna bottom out. So if it does come down again, you just want to see like a higher low. Like I said, stop loss on the line or maybe on 30 cents. There's no continuation yet. It just looks like a topping action. So we'll see if it bounces. I don't think it's out of the question it goes, but LGHL. I don't know what this is. Yeah, we spent a lot of time talking about unbalanced volume today. And it is very important. They may not have given like the clearest of answers for AMC. But it does seem like they didn't really get the sell-off that they wanted on balanced volume. So I was just reading through comments. Yeah, last one here. Let's take a look. All right, so there was an attempt to push resistance and it failed to advance. It backed up, went back down to support. It's kind of where you need it to be. I mean, it doesn't look too hot, does it? It's kind of like still overbought territory and it's dropping, so I'm not sure. I mean, you have a lot of room to the downside, you know. This is fine. You can see that it held that support. May just get another move back up to this 27-cent level just to check it again. Kind of passed through here without a whole lot of fanfare, so yeah, maybe. I would say this is probably a buy if it comes back above like the top, essentially, because if it makes a higher low and then advances again back over the top, you should be in a good spot. Let me see if there's anything I'm like really missing here. Okay, so it's like adjusted outward since that split happened. Pretty quickly. Yeah, I don't know, man. This is one of those stocks that's like kind of running down all the channels it's created. So it's not really respecting creeks in a very logical way. Yeah. This seems like a probable spot of contact later in the future, though, like up around 50 cents. Here. See, these are supports, drops, finds it again here. So that's 2 points that I would look at for direction. And then the other one's real low. I think it's like back down here or something. Really low. So those are the main, that's what defines this price action coming out of that split. So yeah, not much upside. Not yet. Oh, it's Ghost Cat. In a minute. Yeah, that's all I can give you on this. So this one's kind of weird. I don't know. It doesn't seem like it's kind of made the turn yet, I guess. Huge amounts of volume there. I don't know what's going on with this thing. Kind of looks like a descending wedge, but it's a little wonky. Like a, or a descending triangle. Right there. I'd look up Bulkowski on descending triangles and see what you see. That's probably how I'd try to measure it. Right there, maybe. I want to say it's not that high, though. Usually it's like 30% or 40% or something like that. Yeah, but then you got to look at it as if it could break to the other side, in which case, you know, it's going the other way to like 2 cents or something. So volume's high here, but, and it's definitely got some stopping power. There's huge amounts of heavy volume right here. Yeah, that sounds about right. Is this one of those things where you might get like a really strong reaction to the upside around 7 and then go the other way? Like trying to entice like that, trying to entice yeah, it's not unheard of to get like a head fake out of one of these and then just reverse. It's pretty common. Yep, that seems about right actually. And there's a trend there too, so I think that instinctually was probably a good guess. So I think it'll pop. Could be a good little quick play, but probably pop up to like 8 cents or something and then dump again, try to go back down. It may not be successful in that, but that's what I would see as like the first major motion. Meaning like then you come back and look at it and see what happens. It'd probably be stronger if it goes down first. If it dips low first and gets like a spring, there may be a greater chance that it doesn't come back. But if it goes up first from here and just like squeezes up, I think it'll probably reverse, come right back down to test like 4 cent or whatever. And then it could drop through. That's my thought. All right, I'm done for today. I'll see you guys on the morrow. Probably be an early morning one as well, not afternoon. We'll see. If the price action today does turn around, we may have a really fun morning. We'll see what happens. A late day move today or early day move tomorrow would be nice. Yeah, we might see that break today back up to. It wouldn't surprise me if we were in like 450s at some point this week. I guess that's what I'm trying to say. At least from my point of view, 430s makes a lot of sense, maybe 450s. But that doesn't, we know that doesn't necessarily mean you're going to go up forever. It's kind of a mixed bag here. So we'll see. But this week it would make sense to have a pop, even if there's going to be another drop. I think it makes more sense to go up first. I'm really curious to see what happens with this on balance volume. Maybe it doesn't do the like final drop, but all right, gotta go. Y'all have a good one.